Hey guys.
Hey, Scott.
Hey.
Hey, Jamie. How you doing, buddy?
Andy, I am simply ecstatic after what we saw today. It was a fun day.
Yeah, it was a fun day, and we're going to dive into it in just a minute here. And there's so much to talk about. Very impressed with Holly today. Boy, she had some really good, beautiful charts, and yeah, I can't wait to get in that portion. As a matter of fact, we're going to spend so much time, going over Holly. Got some few new little indicators. No, I shouldn't call them indicators, but little add-ons to our charts that you guys I think are going to be impressed with. Nothing major, but kind of just makes things a lot easier for you. But before we go on, let's just talk about what the lawyers want us to talk about, and that's a disclaimer here. And guys, just remember this is for educational purposes only. We're going to come in here and show you incredible software and a lot of cool stuff, but just remember none of this should be construed as investment advice. Okay, we're not here trying to tell you what to buy or sell. If that's what you're looking for, seek out an RIA or a registered a broker or advisor. But we are going to have a lot of fun, and before we do, let's talk about what else we provide here besides the incredible software, and that's our exceptional support in education. We really pride ourselves, guys, just on not bringing you in, giving you a software, and just letting you be out on your own. And we have so many areas where we do provide this support and training and education. We have 4 webinars a week, all in the same time slot. That's 5 Eastern time. I'm not going to go over each one of them, but it is usually a combination of me and Jamie or Steve. We're paired off in twos, and it's a combination of us 3, and each one of us takes turns kind of hosting, and the other one would be the sidekick. And then we give you a special treat on Wednesdays with our CEO, Dan Merkin, and our CTO, Brad Williams, that like to kind of demo the software for you and really open it up for Q&A. And as after we get through here, I'm going to tell you about something we got launching tomorrow that we're really excited about, and I think a lot of you people in here are going to be excited about too. But let's face it, it all starts in the trading room, moderated by Barry Arneson, and he does a great job in there. And if you're new in here and you haven't heard about it, you want to check this out and get in there because you can basically look over the shoulder at Barry's desktop while he trades and calls out his trades, and look at this, and more importantly than just hearing what he trades, look at where he's getting his ideas off our software. And he will share his links with you, his cloud links, so you can have access to the same windows. So there's no better way, I know, because I ran a service like this for about 4 years where I was showing I was screen sharing and people were looking over my shoulder, and it's just there's no better way to learn how to trade than to do that. And we also have a podcast on Fridays, and to say that Scott's going to share with you here at the end. But we don't stop there. I always say we don't stop there because it's very important to keep in mind the training you get when you subscribe to Trade Ideas. Now, on top of everything I just mentioned to you, you get 1 hour of free one-on-one. We call it the hour of power because you either got me, Jamie, or Steve. You have us for a whole hour. We will help you design filters, alerts, configurations, your layouts, and if you want to venture, maybe we can do that in 30 minutes if you can learn the software a little bit before you come in. And then we can spend the latter part of the training going over strategies and just general trading mentoring, I like to call it, because we all have extensive training doing this, trading, not only trading, but also mentoring. So it's an hour well spent, and that is free when you subscribe to either package at Trade Ideas. All right, let's take a look at our agenda today. And before we move down, I'm going to talk about this new tech support. I don't really have anything to display for you at this time, but you will be receiving something from us this evening. And this is going to be a 3-hour event every Friday. And I believe it's going to start, correct me if I'm wrong, Jamie, but is this set for 11 o'clock Eastern time?
Right, 8 o'clock Pacific, so it'd be, yeah, so it's 8 to 11 Pacific.
Okay, so that
11.
would be 11 o'clock Eastern. Okay, so
Yep,
yeah,
yep.
and it's going to be me, Jamie, and Steve, and you'll be looking at our desktop, much like you're doing in this webinar, but it's going to be open for any questions that you have. We'll also be showing you some really cool stuff in there. But this is great because, and the one reason we're doing this, we have a lot of people who come in here and just checking out the software and want to kick the tires, and some of the stuff we do in here is kind of more advanced for our regulars, showing them more fancy alerts and configurations, and some of the new people get a little bit lost. So this is a great spot. I mean, a great place to come if you're looking to learn more about trade ideas, and we're excited about it, and I think you will be too. And that's starting tomorrow, and we're going to run that every Friday now. So keep an eye out for that. You will be getting an email invite this evening, I believe. All right, so let's move on with our agenda here. We're going to talk about the market recap. I got some interesting things to say about that today, and I'm sure Jamie will too. Holly recap, we're going to be spending a lot of time on this today because once again, there were some incredible trades, some incredible setups. And just some incredible entries. On support had 3 or 4 just incredible entries, and I want to really display how you would go about trading some of these Holly trades and what to look for. And Jamie's really excited about the range breaks. He kind of, I believe, if I'm correct, he kind of ventured out to the lower half of this 4 billion market cap and started looking for stocks that are maybe, you know, I don't know if you put a minimum market cap on that, Jamie, but I know you found some fascinating stuff in there today.
Yeah, you're right, Andy. And what I did is instead of trying to figure out, okay, well, should it be between 1 billion and 4 billion or whatever, I kept my regular one, which is 5.4 billion and up, but then I just duplicated it and capped the market cap at 4 billion. Now, boy, the things that were coming through that one today too, it was pretty easy once you pull the chart up to go, yeah, no, because instead of painting ourselves into a corner, I'd rather have more what I perceive to be high quality information flow and then let the charts tell me the rest of the equation, if that makes sense.
Absolutely, yeah. It's been really good ever since you introduced this these range breaks and also your what's the name of it? Your other thing.
Oh, the pack leaders.
Thank you. The pack leaders. Yeah. That's some really cool stuff, and we're looking forward to what you have on the table today.
You know, once the Holly show is done, we'll talk a little bit more about that in depth. But the thing to think about in between now and then is volcano, and I'll just leave it at
that. Okay, we'll keep that in the back of your mind, guys. Volcano. All right, let's open up the spiders here and kind of take a look at what's been kind of developing here, you know, in the last few weeks in the spiders, you know, after that big kind of Trump dump, they call it, you know, the market has been bounced back to all-time highs, breaking down this one. And then we kind of had a couple of very lackadaisical, just not a whole lot going on days. Yesterday, we tried to sell off in the morning. I can't even remember the news anymore, but I know it was in the morning. We sold off, and then we bounced back in the afternoon, put in this nice little hammer. Well, that's a pattern, continuation pattern there. Steve mentioned the other day how stocks or indices like to correct over time versus price. In other words, instead of backing up and to this 239, 240 level and then going higher, they kind of levitate sideways, and that's kind of what we happened here. And then, you know, opened up this market and just a nice little breakout in the spiders. Now, interesting enough, I'm sure a lot of you guys noticed if you looked over at the Qs today, and this is why I argue, you know, with people who just say, you know, rising tide lifts all boats. It doesn't matter. You know, I know Holly did well today, but so did everything else. The market's at all-time highs. That's not the case because this market has been crazy about this. I mean, Qs have been the leaders for oh gosh, several months now. And then you had a nice breakout in the spiders today. And what did the Qs do? Pretty much nothing. They did have a little flurry here in the last closing minutes, but pretty much all day they weren't doing a whole lot. So the Qs were kind of stagnant today, but the leadership was by far the spiders. So If you take a look at Facebook, some of the leaders we've been talking about, nothing there. Amazon, nothing going on there today. So don't think, I can remember back when I started trading 18, 19 years ago, if the market was going, you wanted to be in the stuff that's been leading the market. Doesn't seem that's the case anymore. You get this sector rotation occasionally now, and where the leaders will just pretty much sit dormant for a while, and money will flow into other sectors, and that's kind of what you saw today. And I think Jamie will probably add a lot to this in his range of breakouts when you see the stuff that was what was moving today. But for the most part, IWM is still kind of tried today, nice move today, but still kind of in a funky range. You really have to look to this level up here before you get a breakout, so a good ways to go. So not really seeing anything really in the small cap, although a nice green candle today. Diamonds did have a move with the spiders, but once again, I don't think that was all-time highs. Close to it, maybe. But anyway, it's a train that I don't say anymore that's leaving the station. The thing is left the station way back here, and now it's, like I said, it's halfway across the country. How far it goes, who knows? But it's not something that you want to fight at this time. All right, Jamie, do you have anything that you want to add to the overall market recap, or?
You pretty much hit it from all angles, Andy, and during this whole little run up here in the past, how many ever days before we had, the one red day yesterday, we never like to predict. We never like to predict, right? But coming back around to my volcano comment, what are the guys that study volcanoes? Volcanologists, I think. Something like that.
Okay.
Sounds right. I probably am wrong. Someone please correct me if I am. But in any case, there are people that study volcanoes, right? You might have heard not too long ago, Mount St. Helens is starting to kind of percolate again. And we all know what happened. What was that, back in the 80s when that thing blew? But guess what?
Yeah.
They know well in advance. They study it. They go, what's going on under the surface? And then they monitor it. So they could call it 2 years out and monitor it and go, well, it's getting close now. Everybody better evacuate. And guess what? With Holly and some of these other techniques that I'm going to show everybody towards the end of the session, that's what we're doing. We're studying what's going on underneath the top layer of the market, right? Because
great analogy.
The SPY might as well be a lagging indicator compared to what we're watching now, because we see things happen underneath the surface. And of course, there's no guarantee, but as that, that hot magma builds up and builds, before too long, the end result is painfully obvious. Now, do you want to know about it as it's happening or before it's happening? That's the big thing that separates us.
Yeah, that's a good analogy. It's a very good analogy. It's correct. And you can look a lot at especially some of the stuff that Jamie's been showcasing lately with the compare count and the turbo breaks up and even Holly. So Holly can point to kind of tip the hand of the market a lot of cases. We call it directional bias in some cases, and I think you saw a little bit of that this morning. Even though it was a gap up, the market was kind of gyrating back and forth in the early action, but then Holly started to fire up a lot of longs. And speaking of which, let's dive right in there. I'm too excited to spend any more time on the overall market when we have so much good stuff to talk about today. So let me kind of, just so I can make this big enough to make sure I'm getting there we go.
And what a beautiful yield curve. Oh my goodness, on the risk on today. That's about the we've seen in a very long time.
Yeah. What he's talking about, guys, and for y'all, in here for the first time, kicking the tires, we have what's called risk off and risk on. Okay, risk off today was up $1.40, not bad, but when we talk about a risk on day, this is a risk on day. You had a market that pretty much gapped up, went sideways for the first hour, and then broke out and just pretty much just trended up all day long. And that is why we wanted to give you this risk on and not just Holly's exit. So you can have an idea, even today, if you got out with Holly on every one of her exits, you can look back at the end of the day and say, wow, man, the market went up all day, and look at some of these trades that Holly had. On the risk on versus the risk off, $1.46 here versus 0.9. And I'm going to show you, I'm going to start from the bottom here and pretty much go through Holly's first 5 out of 6 trades here and show you some incredible trades this morning made in the first hour, first 45 minutes as far as that goes, and look at some of these entries. But getting back to what Jamie was talking about here, this risk curve, and it was just beautiful, just took off and just kind of sloped, nicely all day long. And that's risk off and risk on, pretty much the same thing. Just a beautiful curve, and up 450 on risk on. And getting back once again, we give you this so you will have an idea. Okay, if you have a really good entry, and Holly gets out for a reason, like a profit save or a time stop. These were both time stops. You have to evaluate your market conditions and understand what the market's doing. Okay, there's many variables you can look at. What is the sector doing? If there's a sector involved, what's the underlying commodity doing? If you're playing a gold or oil stocks, so there's several things you need to be evaluating and deciding. Hey, do I want to get out here with Holly right now, or do I want to risk holding it for longer? And that's what we're going to talk about. Let's just start from the bottom from our first trade this morning. I'm on Central Time, so this would be basically 17 minutes after the market opened. And this is FI this morning from Holly. And this, let's see, let me zoom in a little bit here. Oh, and just to give you an idea what I was talking about earlier, now you'll see on both the intraday. This is a 5-minute chart, and this is a daily chart. Holly, we are denoting her entry in blue there, along with the price for you, so you can see it easier, and it has AI beside it, so you'll know when you see that. Okay, there's Holly's entry, and then we're also labeling the stop for you, so you get a price of 727. That's the stop area, and also have this little shaded area with the line, so you know exactly where Holly's stop is in this. And then of course you have the green area, which is her basic target moving forward. Okay, so this is, in this one right here, some really cool stuff, especially because a lot of us old-timey traders, we've been looking at charts for so long, we take it for granted. But when I reflect back, back when I started, studying this stuff 20 years ago as far as day trading goes, I'm thinking, I didn't know anything about candlestick charting. I didn't know anything about risk reward, and this kind of really simplifies it for people. It makes it so easy for you to understand that Holly's taking an entry right here, she's calling her stop right here, and her target's up here. Okay, it's up to you to manage, risk along the way as a trader, for sure. But I want to look at this trade in this FI right here. This, I don't condone catching falling knives, but I will bottom fish, so to speak, at some times. And when I see a daily chart like this is what I'm looking for. Okay, look at all these. This has been selling off for several months now, and then you had 6 consecutive down days or red candles, followed by a beautiful hammer and closing on high. Okay, and then Holly calls this today right at the break of this high. Okay, this is a strategy called Alpha Predator. There's very low risk here, because what you're doing here, you're finally getting a bar reversal. Okay, so when this happens, even if you want to keep this real tight and not ride this thing down 25 cents for your stop, it's one that you could take a chance on and say to yourself, okay, this is the first bar reversal in 7 days. This thing has been getting destroyed. I'm going to take a chance on this. Keep it tight. I mean, this is a pattern that I do not want to see come back and go back through lows of the day. Okay, so this is where my judgment comes in. Holly, a little more liberal here, but I'm putting my trader's hat on. This is pretty much a kind of a bottom fishing trade, and if I'm if I'm risking it doing a bar reversal, I do not want it to come back through and go through lows. So, but anyway, a beautiful, beautiful setup there, and never any pain, Jamie. I mean, you bought it, and look at this nice trend up all day. Now, what does Holly do? Holly gets timestamp out for a 15-cent winner, okay? And her exit price was 67 right here. So basically right here, Holly gets out at 67 for a, what was 15-cent winner. This is where you tell yourself the market's going in my favor. I think there's more legs here. I don't see any reason to get out. Maybe I'll drop my stop down here below 60 if it takes out these two bars right here, and I'm going to hold on. So this is an example. I mean, you had another, 30 cents in it probably if you held it to the close. The max profits were a bit higher, probably almost 40 cents. But nonetheless, this is where you have to put your trader's hat on. Beautiful trade here. I'm not going to try to overanalyze each trade too much because we have a lot to go through. But let's look at this InBev.
Real quick here, there was a question. What you just talked about clearly addresses it, and that is the shaded green part is Holly getting out under risk off parameters. The rest of the shaded area is the potential that was there had you decided to stay in the trade and go risk on. So
good point. Yes, I'm glad you brought that up.
For you. Yeah.
Right. Okay. So Holly gets out in the darker green for risk off, right? And the rest of the lighter green is if you go risk off, correct?
Yep.
Okay. Yeah, good question. InBev, this was probably one of my...
That's the common theme, right, is how do we know which one to use? Well, you just address it on a trade-by-trade basis. Makes things a lot simpler.
Mm-hmm. Yes, very good. This is one of my favorite patterns, guys. You want to take a look at this daily and kind of imprint it in your head. And I'm going to talk about the daily, and I think so many more people can benefit from trading, even if you're a day trader, if you look at dailies. And we say it time and time again, the dailies are the true footprints in the sand, guys. And this is such a beautiful pattern. You had a breakout here, of a range breakout on the daily, right around here. You had the gap fill. And then you can see the up bars. Look at the green bars on the green days, the volume that's coming in. Boom. And then, of course, you had this volume bar right here. Okay, stock got tired, sellers came in. Then you had 3 days of pulling back. So you have a momentum stock that is pulling back for 3 days, and then you have your bar reversal there. Imprint that in your head. There's, as far as the momentum trade, I can't think of too many better patterns I like to see than a stock that has kind of broken out of a range and then pulled back and breathed, with 3 consecutive down days, as traders who kind of threw in the towel after after the run they had for whatever reason, and then you get that kind of move. But look at the entry in Holly today, 588. So let's take a look at this high right here. 588 was yesterday's high. So Holly got in right at yesterday's high, anticipating a range break, and of course she was right. I mean, only anticipated by 1 cent, of course. But once again, Holly gets in, and she gets out on a time stop, another time stop, which I'm kind of a little bit surprised because I guess it's probably a 60-minute time stop. But she gets out right there for 13 minutes. But if you're looking at this pattern and you have a pattern like this is where you want to tell yourself, you know what, I love this daily pattern. Okay, volume is coming in. You can see the volume today was more than it was these other prior 2 days. So you had volume coming in this morning. This is one, the market's going in your favor. I see no reason to get out of this. Even if you get out for half, you have to hold on to half because everything is so ripe about this daily pattern here. And once again, had you held on to risk on, it was up 65 cents.
Right,
Keep in mind,
Andy, Holly pegged that so early, right?
Oh, yeah, that's what I'm saying.
And then, of course, if we look at the 11:45, 15-minute candle, 4 or 5 minute, what else happens right there? we're seeing that crisp, nice little range break occur.
Right there. Yep.
Another good
Right there.
opportunity to pack on
Yep.
more shares. Yeah.
Yep. He's talking about right here. It's kind of breaking out of this range. There you go. So you're right. You add on. You add on. The really, really best traders that I know, they're not, you know, and I do this, you know, as a trader, especially in my swing trading. I get a nice run, I take off half. Some of the most vicious traders I know, they're looking to enter this trade. They're seeing this pattern. They're looking, where can I buy more? Where can I buy more? And like Jamie was saying, that's probably where they would even buy, add on. So they're not looking to take off half the position, let the other half. You know, some of your better traders are looking at this daily pattern and saying, okay, where can I add to my position? And that's a great place to add to it right there.
Yeah, and a lot of times people, Andy, you know, guys I've talked to are just like, you know what, I'll just get a little skin in the game, and then as these 100, 200 share positions do their thing, they'll reevaluate and start to predict, okay, well, this one's coiling up, it's tightening up. I've seen this movie time and time again, right? Because as you see this over and over again, as we always say, it becomes second nature. You don't have to really go, is that pattern forming or not? It'll just snap. Yep. And so get a little skin in the game, whether it's 10 shares, 50 shares, 100 shares, whatever. And then as the position, which, by the way, already has tremendous statistical weight behind it, which should therefore help alleviate the fear demon that sits on the right shoulder, and we all know greed sits on the left, right? We constantly have to appease those guys, right? Sure. Keep everything in synergy.
Absolutely.
But yeah, getting a little skin in the game early on these Holly plays, and then see what transpires, and really being able to identify the ones you can leverage. Boy, you can really take your game to the next level doing that.
Yep. Good point, Jamie. All right, moving on. Okay, after that, Holly, one of my favorite strategies is on support. Holly spit pretty much 4 of them in a row out. I want you. This was by far the most outperforming strategy today. If you look over here on the risk, of course, all of it was green on risk off. But if you look over here on the risk on, you're going to see 68 cents in Zon. I'll go over to this $1.46 in Zillow, and then 62 cents in Grub. So Grubhub. So you're boy. Let's take a look at this. And remember, these are on support is a fading strategy. Basically, you're going against the grain. You're buying on a pullback. Okay. This is on this morning. Once again, here's the stock open. And geez, make sure this. I don't know why I'm not seeing the. Okay, this is a 5. Let me go to a 5-minute here. Oh, that's too much. Okay, yeah, there we go. All right, so the stock opened up. Okay, and this is the first enters on a pullback on this bar right here, and at 21.14, pretty much the low of the day. Okay. Stock kind of bounced up. Holly, once again, got out on profit save, because once she registers a certain amount of profit and she starts to give some of that back, it's an algorithm based on the volatility and the price of the stock, she will exit the trade and bang out her profits. But if you're looking at this, and once again, keeping the market in mind, okay, the market's gapping up and pretty much going sideways, not selling off, comes back here to a flat. You could look at this as a potential trade around. I don't want to get into trade arounds, like I said, because we have too much to cover today. But once again, here's a trade that pretty much Holly bought on a pullback at the lows of the day, and this generated so much more alpha as the day went on. So Zillow, same principle here on support. And Jamie, if you have something you want to add, I'm just trying to. There's so much to cover. I kind of just don't want to spend too much time on each one.
No, we're doing fine, man. It's all such good content. But yeah, you're right.
It really is.
In these on support trades, you're picking them off at such a nice price. It's pretty easy to identify when they're going to break that range, and then you just set a price alert, and when it goes, you just tack on a little bit. You've already got the statistical weight, and now you're also in it before the simple pattern completes itself. Boom. I mean, that's the beauty, the simplicity of it. That is where it's just strong. basic statistical weight coupled with a very basic pattern, pure and simple.
Yes, absolutely. I mean, if you look over here at on support in the strategies, you'll see that the winning percentage of her back testing and optimizing the night before came out at 61.3. Not bad at all, with a profit factor of 2.19. That's pretty good. It's a pretty good profit factor. So you have a strategy that's spitting out, odds in your favor. Okay, you're buying a stock on a pullback. So far, and this is the second one I'm showing you. Once again, here's another one, pretty much bought at lows of the day. And you have a market that's moving higher, and you got a stock that's kind of gyrating. Learn to be patient and sit with this, especially at this point when the market starts to break out and go higher, and then you got to tell yourself, okay, I'm gonna hang on to this, because Zillow right here, if you got out for a 9-cent winner on a profit save like Holly did, when everything was pretty much stacked in your favor, look how much you left on the table. $1.46, is what the risk on profit was. And there you go. Went to the daily there, breaking out pretty much on all-time highs. PTLA, this was one, let's just face it, not all of them are going to work. Same strategy she bought. Now, it gave you a lot more alpha to the upside before rolling over and caving in, but I'm going to be fair. Okay, it did roll over. And that one, like I said, not all of them are going to work. She did exit with a risk-off profit. And then let's take a look at Grub, another beautiful entry, pretty much close at lows. And I was watching this when it happened. Holly got in at 43.09. This is one that anybody could have got at 43 or lower, because I was watching. It went down right through that. Holly got it on the pullback there, went down another 12 cents, something like that, 11 or 12 cents. Gave you plenty of time to actually enter this at a better price. And then, pretty much trending up higher. Holly did, manage to sit through that. Wasn't much, and she did get a risk off profit of 44 cents, so not bad at all. But once again, market continued to trend higher, and so did the stock. And I also want to point out, guys, I've noticed a lot of these 1.31 million shares in that one. Not, I know some of you guys see these stocks trading 140,000 or 100,000 in feel like it's too thin. Zillow, 1.33 million. These are not stocks doing, 1 or 200,000. 1 million there in Zon. InBev, 1.45 million. So a lot of good opportunity today on some very liquid stocks. I don't know if you noticed that, Jamie, but there was some liquidity in some of her calls today.
Oh, absolutely, yeah.
And I love seeing that. Boy, let's see. Grub. I'm sure there's WD. Oh yeah, let's not forget about Tailwind. I wanted to go over this one right here. This Tailwind has been a very successful strategy of late, and you kind of have another pattern like this where a stock recently, I say recently, it's been about a month ago, had a nice gap up and just kind of been slopping around, trending down. Well, Holly calls it on a pullback. This was later in the day, 11:42 Central Time. So Holly catches a pullback right here, Tailwind. Just to let you guys know before I forget, in case some of you guys are in here like, I don't understand the names of these, don't worry. We have a page available for you guys on our website where you guys are going to be able to go and look up these strategies. That's coming out hopefully by the end of the week. If not, I'm sure it'll be out early next week. But Tailwind is a strategy that's kind of, it does buy on pullbacks, and it looks for basically for kind of a continuation move higher, very kind of like on support, but mostly just a play on the stock, which, has this wind behind it from moving higher, and it's going to continue in that same direction. Plus, you had a nice 5-day breakout right here, 5-day high. But once again, beautiful entry. She got out for a profit, saved 13 cents. Could have gotten 60 cents, and down. Thought there was another Tailwind. Oh, yes, this IMPV. This is one Where Holly got out this morning for a 5-cent loser, but it never really went anything below that. So that was kind of the maximum loss after Holly got out right here, just kind of traded sideways. One you could have held on to and made, 40 cents better on this trade. But but great trades today. Once again, risk on profit was, 450. And what that means basically is for if you bought one share of every alert that Holly spit out today, you would have made $4.50. So you just add zeros to that. If you bought 1,000 shares, you would have made $4,500. But that's what the risk on means. And boy, anything you want to add to Holly's trades today? I just some really good stuff.
The numbers pretty much speak for themselves today, Andy. But the most interesting takeaway is that, considering the SPY had two, major pushes today when it first cracked out of the range, and there's that same simple pattern that we illustrated in the Holly trades, right there at 11:45 Eastern. The SPY breaks its range, takes a leg up, consolidates, and then gives it one more push, right before the close. So the interesting thing to point out is Holly was already loading a boat before these levels had been penetrated, right? So
absolutely.
Yet another example of, hey, guess what? There's 1, 2, 3, 4, 5, 6, 8, 20, 50 infinite layers of data in the marketplace. Most people are watching the top layer only, right? But we dig down a lot deeper, and things become, I can't just say they jump out at you at first, because it takes a little practice, as with anything else. But once you can identify what's really going on, where the action is, your path as a trader is going to be easier. Never say easy, but we can say easier than it would be.
Yep. Yeah, that's a good point. I'm glad you brought that up, because lately I've seen the market, sell off in the early goings, and sometimes sell off pretty good before you can tell by the tails. A lot of times you see in the tails. But today, market opened up and was kind of, like I said, just kind of moving sideways, and then all of a sudden we talk about directional bias. Holly, in a span of about let's see, 28 minutes, she puts out, boom, boom, four longs. No, sorry, 5 longs. Not 6 longs. So there you go. You got 6 longs in a span of 28 minutes when the market's pretty much going sideways. And look, guys, her best tested, optimized strategies the night before were shorts. And yet today we got no shorts out of Holly. So the setups weren't there. They were for whatever reason. These were not, coming together like these long setups were. And so good discipline by Holly today. Not a lot of trades either. I can see, I've seen days like this where we've had, 30, 35 trades, but we had maybe 14 or 15 today, Jamie. And boy, that's that's a great P&L.
Yeah, I was real happy not only with the performance, but on the relatively small number of trades, 14 trades that generated, in excess of 4 points, and even spiking up to 5 here. Because, it all kind of goes back down to, if we go back in the Wayback Time Machine a little bit, Andy, when we all first started trading, it was a completely different game. And myself and a lot of other people, we traded the same stocks every day because they moved.
Oh, yeah.
When things stopped moving, we still kept trying to trade those stocks. Things didn't work out so well. So the point I'm trying to make here is that every day there are plenty of high-quality trades out there. Now, today there were just a lot more than normal. But these things that we're showing everybody, they're there every day. The things I'm about to show you are here every day. There were just so many more of them today than there normally are because, well, the market broke out a little bit. But even if we're range bound, I still think that this is going to be where the action is, because from a trader's perspective, do you want to trade all the stocks where there's no party, or do you want to go to where the party is? The party in most cases is where the volume is. But just because the volume's there doesn't mean the stock's going to move. Then we have to rely on our technical skills. And so
Mm-hmm.
what would you rather have? Simple game plan or a game plan with 30 moving parts? Pretty common sense question.
Very much
Let's
so.
talk about, hey, could you even, nobody has fear of driving around in a major metropolis city anymore because everybody's got this little digital assistant called Google Maps that just tells you, you're just like, oh, all I got to do is sit back and follow the computer's instructions. Now,
Mm-hmm.
would you be on a vacation in the middle of a big city and just go, you know what, this Google thinks it's so smart. It thinks it knows where to go all the time. I'm sick of it. I'm just going to not listen to it. I'm going back to paper maps. This is my poor attempt at comedy, ladies and gentlemen, but you get the point. You're not going to do that. Why would you do that? Make your life a lot more difficult. Well, let's apply the same logic to our trading, right? Let's set the signpost up in the form of the new chart functionality. Say, this is where you want to go. If things don't work out, you're going to go here. Pretty simple. We're slowly becoming the Google Maps for the U.S. equity markets. So if you're ready, I'll flip it over here and I'll show you some other cool stuff.
Oh, yeah.
All right.
Yeah. I'm looking forward to it, man. Go ahead and take it.
Okay, and remember I've been having those screen sizing issues, so please tell me if everything looks in parity here.
That's great.
All right, so you got eyes on here. Okay, good.
I do.
Okay, so for those of you who attend regularly, these windows are going to look familiar. For those of you who might be new, I'll do my best to explain the nature behind them. So we're always talking about the difference between, or trying to dispense with the difference between day trading, swing trading. It's all just trading. First part of the equation, we have to have a good entry. Second part of the equation, we're up in it. The close is coming. Do we take our money off the table, wait for the next day, or do we try to hold a little bit for more money? What if it gaps up the next day? What if it keeps on going? I'd hate to get out for 50 cents. If I can make $1.50 or more or higher percentage rate, whatever. All right. So, from a 101 investing standpoint, we always look to the left. And of course, the SPY is the perfect example today. We closed up here. If we took some SPY home overnight, or if we were thinking about it, we would have looked over here and gone, I've squished my chart up all the way. I'm looking to the left. Nothing for it to bump its head on. Definitely the path of least resistance. If we got it down here, there's plenty of places that could act as a stopping depot, but not here. So let's take that step a little bit further. If we're trying to find good intraday signals, and of course with a volume, and let's say this is the pattern that we're adhering to. Once again, you can look high, you can look low. It's going to be real hard to find a more simple pattern than range break. Here's the low, here's the high, it goes to sleep. It's range bound between the high and the low, these two lines here. As it percolates, just like the volcano, we can see, ooh, it's getting close, it's tightening up. What's going to happen when we get here? Well, you can see what happened. There was some good volume today, and this thing pushed out and headed higher, and guess what? It did it again. Now, there wasn't a whole lot of time to react to this one because this was in the last 15 minutes, but this pattern is here every day in, day out, in many, many stocks. Today, the market just happened to be the prime example. So if we use this little pattern here as our intraday signal, and we're only looking at stocks that are out of their box, that pretty much sounds like the path of least resistance to me. They're out of their box. We got a good intraday signal. There's nothing to stop them. Now, that's not going to say they're not going to fold over, because they all do at some point in time. But there's just least resistance here, which makes a lot of sense to me. So this list right here, and by the way, don't worry, I'll drop all these windows in the chat before we're done, so that those of you who might want to start observing can do so easily. Pack leaders. This list is so big, it won't even fit on the page. I have to scroll. It's like 2 versions of this today. And by far and away, it's the biggest one we've ever seen. No big surprise because the market's breaking up or breaking out. Now, I don't even know how long it's been, Andy, 6 weeks, somewhere around there, maybe even 2 months. At first, this list was only about this big every day. And then slowly started getting bigger and bigger. Going back to the volcano analogy, if we're seeing all of these stocks busting out with volume to all-time highs, lifetime highs, mind you, and by the way, let's take a peek in here. Once again, very simple configuration. But this little guy right here is what's giving us the hot sauce. Position in lifetime range has to be a minimum of 100%. So then it just becomes about this, monitoring stocks like this for this pattern, and if it's nice and tight and we can hit it with some volume, we're in the money, and then the fun part begins, the second part of the equation. We found the choice entry on the simplest pattern and the lowest risk that we can, and I'm just going to go ahead and illustrate, if you take this trade here, what would you be risking? Well, I use the bottom of the prior 15 minutes. I usually watch 5-minute candles, but we're looking at 15 minutes here. So, not including the entry candle, would have been the low of this 15-minute candle right here. So we're always adhering to a nice tight risk factor that is, the potential represents hopefully multiples of what we're risking. So once again, pretty simple stuff. If you can draw some horizontal lines, you can identify these ranges. Now, don't get me wrong, it's not like every stock we pull up is going to look like this, but that's the name of the game. Even if you have to filter through 10, 20, 30, 40, 50 on a slow day, well, it's worth it. You know, it's patience. Let the trade materialize to where we don't have to squint our eyes or get all the way across the room to see, oh, well, yeah, now I can see it's a consolidation. It should be nice and obvious by the time we pull it up. So today, these things were all over the place. So these windows right here are alert windows, and by the way, I've got small borders displayed here, but if I remove them, you'll see that these are A windows because they are alert windows, which are a little bit different than the top list because we can factor in a catalyst. Now, taking a look at this chart right here, if it's breaking out of there, you cannot do it without hitting a new high. And that's why in both of these windows, the catalyst is a simple new high, and it's up to us to determine, are we getting it just right? Because way up here probably is a little too late, right? So we want them just as they're breaking. So, and by the way, ladies and gents, I tweeted out so many of these setups today that worked. If you would like to go check them all out at your leisure, just look at my feed on QuantBot on Twitter. You can go review these plays for yourself because they're all time-stamped. All right. So these little guys right here were just going at a pretty brisk pace for the first couple of hours, and then they slacked off. But usually when I'm watching these guys, and they also have to be hitting the lifetime high of 100%, you get a couple every 15 minutes maybe. But boy, about halfway through the day, these things just started lighting up. Way before the market decided it was going to push higher here too. It was probably about right here, and these things started going bonkers. So if I just review the history here and kind of scroll through, and by the way, the what was that trade from Holly again today? Even better is when we have multiple things telling us the same thing. And the perfect example of that today was NBEV, because Holly had already called it, and then it came through my high volume under 4 billion ticker as it was encroaching on these levels. So once again, what Andy was talking about is that was the pristinest trade around you could ever hope for, right? And so I'm not going to bore everybody with going through the entire histories here, but I've written down a few. So PKI was one of these guys that came through today, and it was right here. So when you see this, not near as pristine, let's just flip back over, pristine, but a little bit more stretched out, but still pretty pristine. because if we draw the line here, we got a nice identifiable range. Comes up here, it's a little bit short, and then we get these nice calming little NR7 type bars right here. Perfect little bars that tell us buyers and sellers are equal. If I'm going to buy this penetration right here as it's cracking through that high with very much accelerated 1 minute volume, which this one was, then we're going to put that trade on. We're going to use our risk right here. Bottom of the prior 15 minutes, not including the entry bar. So see, you don't need any RSIs. You don't need any Fibonacci's or Ikimochu clouds. You don't need anything because these things are happening whether those studies are on this chart or not. Now you could lay those studies over. All you're going to see are correlations, right? But the bottom line is you don't really need those things. And then guess what? Where might this thing bump its head? You see how that breakout on the daily is the same thing as what's happening here? That's what we call fractal. This pattern can appear on any time frame, all right? And it's so simple. Hey, we have penetration here, looking good. We've got penetration out of this channel, looking good. When I look to the left, there's nothing. So PKI was a very good example. I'm just going to motor through some of these because we are pressing up against time. But these were all over the place. Tree, nice and flat. Boom, popping through. CUK later in the day. And that's the nice thing about these guys. They can happen at any time of the day. All right. Some of them are going to move a lot. Some of them are going to move a little. Some of them you'll get in the money. And if you don't take your cookies, they might crash back through the entry point. But getting in the money is the first part of the equation. Managing your risk and your profits, of course, that can only be attributable to us. And let's go back to those little demons that sit on your shoulder. Always take your profits, right? Good idea to always take profit for that first half or the first half of your lot off on a good move. Give the other lot back to break even. That's going to keep you from giving money back because sometimes they don't hold, but you're in the money and they'll flop back over. So just keep that in mind. All right, one more time on DRI here. And the nice thing about this, although we didn't have a whole lot of time before the market closed to take advantage of the second push, but if you can identify these buyers early, see once again how low the risk is on these. On the entry bar, risk is down here. We get a push, and then later in the day, the pattern sets up again for another entry. So let's see what else we had today. BDX was another fantastic one. Once again, nice tight action, low risk, high reward. WCN, and I'm probably only getting about through a third of these. All right. This one, I mean, how comforting, you know, what if everything you pulled up looked like this, Andy? I mean, yeah. How hard would it be to pull the trigger every time you saw one of these, right? And it's mashing through this area, doing 3, 4, 5, sometimes even 10 or 12 times normal 1 minute volume. Because see, therein lies the hitch right there. Beautiful pattern coupled with extremely high volume. It's kind of hard to beat that combination. Okay, well, we got one more here, and there were a couple of other nice ones that we don't even have time to get to here. But once again, this one goes off about 2 hours into the open. Nice and tight, it pushes, and it goes. So I hope I'm doing a decent job at kind of illustrating this little pattern here because it really is one of the more simpler patterns to focus on. And if you just get proficient at identifying it and doing it with stocks that don't have anything to bump their head on, when we're in an up market, this is probably what you want to be paying attention to. And I'm not saying to abandon anything else that you might like, but if you're not taking advantage of these low risk entries on these stocks that are out of their box, well, then you're just, you know, you're kind of shortchanging yourself. You might as well be getting some of this because it's here every day. It's just on the slower days, they're a little bit more difficult to find than they were today. Andy, anything to add to that?
No, I think it's very, very good stuff, Jamie. One question is, they're asking, are you finding most of these on pack leaders or the turbo brakes? I told them both, but because I know you look at both of these, yeah.
Well, because let's say this little guy, and of course the market's closed right now, but we can see all these guys closed at their high. But as we get down here and see this little separation from the right margin, these guys closed close to their highs, but they weren't quite at their highs, right? So here was the closing bar, the high was right up here. Now, interestingly enough, I just pulled this one up at random, but if it continues this little pattern on into the next session, and then cracks above that high on high volume, this is where we bring the price alerts in, because these guys are cracking the high, so it's just about pulling them up and seeing if you're catching them at the right time, because trading is all about timing. But these guys are already cracking out with the volume. You might want to look at these guys too, because they're at highs. So this is just a list of things to look at, and when you start pulling them up, you're going to find, well, you're going to catch some of them, but some of them have already left the station. Now, if you start looking at the ones that are close to their high, like for example, let's say we identified this one right here, because we were just looking at the pack leaders list and we saw it was below its high, and we pulled it up and we saw it exhibiting this little pattern here, but it was down here. Well, this would have been the time to catch it. Of course, that hadn't happened yet, so when it's down here, what do? Well, instead of just drawing a line, and the top of that wick right there is 47.93. We come up here and we say 47.94, set my price alert. If it rises to that price, I want to go long, and then boom. That way when it gets over here, you get your alert and you're like, oh my gosh, I can buy it anywhere here. Here's my risk. Simple. About as simple as you can ever hope to get right there, right? But that's a way to get them, you know, when they're exhibiting this guy and you're thinking to yourself, well, if it creeps back up to this high right here, I want to know about it. And that's just when you right click and set your price alert. So you can set price alerts for the ones that are looking good but haven't happened yet. And then these guys are for the ones in real time. As you pull them up, you see if your timing is right. And you know, today it was like almost 1 out of 3 was pristine. But on a day not like today, it's just going to take a little bit more time. In other words, game is sparse, right? Sometimes it's all over the place. Today just happened to be all over the place, but tomorrow might be. It's Friday. We'll see what happens. Now, before I wrap it up here, because I know we need to bring Scott in, I want to throw out something completely different. Now, the inverse to these windows, I have a turbo brakes down. So I'm sitting there thinking to myself today, well, I'm going to start looking at some of the stocks on down because we're in an up market. So a lot of these things might be butting up against good resistance, because Andy, myself, Steve, we always talk about people wanting to catch bottoms. And we're like, well, you know, knife catching is a tricky business, but there's a right way to do it if you're going to attempt it, and there's a wrong way to do it. So today we're going to use the example of Clorox. CLX, everybody knows who Clorox is, right? Well, I saw Clorox coming through my turbo brakes down today, so I'm like, well, let's see what it looks like. First thing my eyes went to is the daily. Now, at its low, see this little doji type candle it put in today? Mm-hmm. So when I pulled it up, it was right there, butting up nicely against that wick. So I'm thinking to myself, this looks pretty good. So then I started examining the volume with a little bit different microscope through some of my other windows, and I'm like, volume's dried up. So I let it come down here, and I'm like, okay, if it punches back through that level, might not be a bad long, and we can see it worked pretty well. Now, if you're just looking at the daily, you're like, oh, looks like it's in the abyss. But when we look over here, nice and tight against there, volume dried up. We can take a spot, we can take a shot at it right here, use outside of that wick as our stop loss, and it worked. And before the close was out, CLX, by the way, there was my time I created the alert. It triggered 13 minutes later, and then you were able to pluck about a nice $1.31 before the close was out. So see, lots of different ways to parse this data, but we can do it in a relatively simple fashion pretty much for whatever you're trying to do. And by the way, these were all my price alerts from last week. I'll be closing them all out tomorrow. But not a bad little tally on this many positions. 20 points on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And all of these were found through the same methodology that I just illustrated in the pack leaders and the accompanying alert windows. All right, well, I hope I didn't confuse everybody too much. I know we're at the end of the hour, so Andy?
No, yeah, good stuff. I don't know if you have the presentation up. If not, you can just switch it back over to me, and I'll put it up here for Scott.
And I'll be dropping these windows into the chat area.
All right, Scott, would you like to come in and walk them to the end here?
There's my mute button. Sure.
Yeah. Oh, there it is. Okay.
Thanks for the great presentation, guys. Just want to remind everyone, I didn't put in a slide for this, but you'll be getting an email shortly, probably within the next half hour, I think is when it's scheduled. We have a new support session on Fridays, and all the support people are going to be taking turns in there. Probably be Andy, Jamie, Steve. Barry's on vacation. A couple of those, Brad and Dan will probably pop in, although I think Dan is taking care of the chat room for Barry. And it's going to be a 3-hour there'll be no format, just time for you to ask questions. Starts at 8 a.m. Pacific, 11 a.m. Eastern, and goes on for 3 hours. You're going to get the invite with the link. You can just pop in, ask your questions, see the response to the questions, see what other people are asking, that sort of thing. So it's kind of a free-form thing. It's very similar to what we do during the open houses to supplement the chat room, the trading room. So it's very similar to the trading room, except it's a different environment. It's just for support questions, technical support, that sort of thing. We were trying it out. It seems like a great idea, so we'll see how it goes. So the slide that you're looking at right now is about Brokerage Plus for interactive brokerage. We had a couple questions in the chat, in the questions panel about automatic trading. Currently, we only support it through interactive brokerage, and the beta number on there is old, but the newer version also supports it. So if you go to tradeideas.com/beta, you can get 4.0.136. And if you're an interactive brokerage client, you can connect that to your IB account and do automated trading or gray box trading using your Trade Idea strategies. Any questions about setting it up, email info@trade-ideas.com. We also have a helpful YouTube video. We'll probably be doing a webinar just on this at some point in the near future, so do stay tuned for those invites. You'll see them in your email. And we also have a podcast, and I know we have a special guest tomorrow. I can't recall her name. She is a very active on Twitter, a lot of Twitter followers. Seemed like an interesting combo to talk with Dan, so Dan will be chatting with her tomorrow. And you can subscribe to the podcast, searching for Trade Ideas Podcast in any of the podcast applications that you use to listen to it on. So go ahead and find that in, the iOS podcast app, Stitcher, Overcast. There's a whole bunch of them. You can find it in there. The new episode goes up on Fridays. Indeterminate time. It's usually shortly after the market closes. So just stay tuned for that to pop into your podcast queue, and you can listen to that over the weekend. Get you ready for Monday. Also, you can listen to the archived version. We archived episodes. We have all the episodes up there, so you can stream any of those. We have a new code. It'll save you 15% off your first month or year of Trade Ideas. It's June Boom. You need to use all caps, just like you see it. It works for both standard and premium Trade Ideas. Remember, what a great value that is. If you sign up for standard at $99 a month, using that code, 15% discount, you're still eligible for the full hour of one-on-one training. It's a pretty amazing deal. I would not laugh at that because it is outstanding way to onboard our clients. Although we do recommend premium, so you can start that out. Try it at $188 a month and then upgrade to the yearly, or get the full benefit of that discount by just purchasing the $1888 a year using that discount. Thanks everyone for joining us. Any questions, email info@trade-ideas.com. The recording will be up on our YouTube channel tonight at some point, and get an email reminder about where to find it tomorrow. It'll come from it'll come to your email address you used to register for the webinar app, and it'll come from the GoToWebinar. It might look like it comes from Brad. Follow Jamie at QuantBot on Twitter. Steve Gomez is at Today Trader. Dan Merkin's Trade Ideas 1. Facebook.com/Trade Ideas Pros, where to find us on Facebook. So follow the page and then like our content and share it, because that way your friends will know about it. Again, any questions, info@trade-ideas.com. The phone number is excellent for help with your billing or account issues, but that's not for technical support. Just use the info app for technical support. It's the best way to get a fast response for something about how to use trade ideas, how to set up a scan, all that kind of good stuff. Very helpful team. Thanks, Andy and Jamie. I guess we'll see you in that the Friday support session. See how that goes.
Oh yeah, it's going to be fun. Make sure you guys come in there for sure. It's going to be you'll learn a lot.
Yeah,
thank you guys for coming.
Yeah, just keep tuned to your email. You guys all get the link. All right. Thanks, everyone.
All right. Thanks, Jamie.
All right. We'll see you tomorrow. Bye-bye.